Hello traders, my name is Christopher Vecchio, currency analyst with Daily FX. Today is Wednesday, February 19th, 2014. These are your FX headlines as we turn the page to North America, and the British pound is pulling back a little bit after a bit of weaker than expected labor market data. The ILO unemployment rate 3 months ended in December fell to 7.2% from 7.1%. And I say fell because ultimately that means the labor market might be seeing a bit of a worsening conditions. Also, we saw that the jobs rate change slowed to 193K for the 3 months ended in December from 250K expected, from 280K in November. Overall, it looks like the UK labor market might be seeing a bit of a slowdown at the end of the year, in line with what the rest of the developed economies are seeing. Overall, though, we're talking about a situation with jobless claims pulling back for the 15th straight month. Overall, it's a situation in which the UK economy still moves in the right direction. When we take a look at pound dollar here, we actually see that pound dollar remains below the 166.70 level, the January 24th high that was respected for about 3 weeks there. We have continued to pull back from that 167.48 figure, that being the April 2011 high thereabouts, as well as the 618 extension of the July and then September through November bull flag we've been talking about for the past several months. Ultimately today, the Fed is going to be the big determinant here. Same thing goes for the euro dollar. We see that euro dollar tested a big former support turn resistance level, the ascending trend line off the July and November lows. Now we're seeing that there's a bit of a pullback. Both the euro dollar and pound dollar are at risk for the very same reason. You know, this Fed meeting occurred in between the December and the January NFP releases. And so if the Fed is confident that even if another print or another 2 prints or 3 prints come out sour, that they remain on course to taper, it really turns the recent sentiment on its head that the Fed might consider stopping or slowing the taper. Therefore, if we see the Fed is issuing a very cautious tone at this meeting, in which they're saying, you know, if we have another bad print, maybe we should slow the tapering down. This was before we had that weak January report, 113K versus 187K expected, come out in the beginning of February. And, you know, therefore, there's a lot happening in the market right now. We could see a significant shift. Stocks could pull back after their miraculous run the last 9 days. Gold has had a big explosive move higher from near the 1250s up towards the 1330s. So there's a lot going on in the market right now that could be affected by today's FOMC minutes. Ultimately, the gauge, the barometer of how confident the Fed feels will determine the efficacy of this recent U.S. dollar pullback, particularly against the European currencies. That's it for me today. We'll be back tomorrow morning, of course, for a video update. We'll be talking more about the FOMC later on today. Stay tuned with Daily FX for all the news, headlines, and analysis you need to get you through your trading day. Good luck.